Hey guys, welcome back to the blog. Thank you for tuning in. I hope you're all doing well. If you're new to the channel, hit that subscribe button and do not miss out on any of our content. So guys, in today's video, what I'm going to be speaking about is that Bitcoin and cryptocurrencies are not all about money making. So of course, a lot of people like to trade, buy, sell cryptocurrencies and say, yo man, I made $200 today, I'm balling. No, that's not the whole concept. Of course, there's professional funds and hedge funds, and those are actually interesting to look at. But for the day-to-day retail trader, what I like to do is to give you guys a better example of a couple points that you need to know about cryptocurrencies and their capabilities. So first of all, is that cryptocurrencies are providing freedom from third parties. Due to the nature of decentralization within cryptocurrencies, what we're doing is we're getting rid of dependency on banks, clearinghouses, settlement payers, whatnot, and this has now actually been cut, and we don't need the third party. It's out of the equation. Me and you can transact whenever we want, with however much we want, and with whomever we want. And the point is now that it's a lot more efficient. We're not wasting time on clearing. We can send money to each other thanks to a public network. And this happens pretty much all in an instant, so within a matter of minutes. The second thing is that cryptocurrencies are giving you control back of your money. So the way we know it is that we go to a bank, we go to a fund, we go to an online payment system, wherever we go, there's always someone that's controlling your money. They're telling you how much you can spend, how much cash you can spend, how much you can withdraw, all that stuff, right? So there's limitations set on you. But now with cryptocurrencies, what we can do is that we have a system where no one is controlling you. You are in full control of your money, which means you decide how to store it. You decide, how much you want to pay, how much you want to receive, how much you want to spend generally. All of that stuff is now up to you. And you guys really have to recognize that that is very disruptive and very interesting. Third point is now that cryptocurrencies are disrupting the financial sector and the remittance industry. So the remittance industry, as we know it, is a $2 to $3 billion market, and it's obviously key, right? A lot of people go out of their home countries to work in the US, in Europe, in Asia, wherever they are, and send money back home. The problem is when they send money back home, they're losing a lot out on fees and percentages that are taken as commission. And now with Bitcoin, what you can do is obviously you can send that amount and someone can cash it out for a very low fee. But when sending the money, you don't lose out on any of the fees, right? You're paying 1% of a transaction, if that, and that's very important. Now the second point is that financial institutions, the way the 2008 market crash happened was that one bank was lending credit to another and another and another. And this kept repeating until no one actually knew who owned that credit, because the back office takes time to process that. Now what blockchain can do is come in and obviously set the record straight, provide transparency, and verify a credit or a transaction within minutes, right? Using a sort of token system or whatever. You can do that very quick and easy, and therefore you know who owns what. The fourth thing is obviously now that I believe the next billion-dollar wave companies are going to be blockchain powered. So what I mean is that they're going to use blockchain technology to disrupt a certain industry, whether that's going to be in healthcare, in finance, or supply chain. We're not sure yet. We're hoping it will be a big one. And obviously within the payment system, we're already seeing changes. And it's very important to recognize that blockchain has that ability using a certain cryptocurrency. And we're very much looking forward to what everyone's going to be delivering. The fifth point now is that cryptocurrencies may now be a new global reserve. So what I mean is that if fiat currencies such as the euro, the dollar, the pound, they crash, hyperinflation, whatever happens to them, right? As a backup to government issued currencies, we're actually going to have a digital currency that's set in stone, that cannot be hyperinflated. So you can't just print out more, right? You have a set number that's going to be distributed. People are going to be obviously trading that with one another and transacting. And that's obviously a much safer method than just, using inflation to battle inflation. The example of Venezuela is obviously a very sad one. And this happened because the country was trying to fight inflation with more inflation, which leads to hyperinflation. And therefore, obviously, the currency collapsed and people are actually using Bitcoin more and more. So cryptocurrencies are becoming a better and a more secure source for you to buy groceries or to spend money, basically. So to summarize, guys, I'd like to say that obviously cryptocurrencies are not all about money making. It's one part of it. If you're good at it, by all means go for it. But I'd just like to say that you have to recognize the bigger picture, which is that it's about decentralization, giving you back control of your money, cutting out the third man or the middleman in a transaction. And basically all of that put together equates to cryptocurrencies, right? The whole idea of you being in control of your money, of us all working in a public network, and just generally a new and disruptive cryptocurrency working as a global reserve is something I look very forward to. Now, thank you for watching, guys. I hope you enjoyed the show. If you've taken a couple points away, make sure to smash that like button, leave a comment below, subscribe, and last but not least, stay safe, stay smart, stay humble, and take care.
Asni.